Next, we are pleased to welcome Mr. Marius Dan, CEO for Central Asia at Franklin Templeton, to present on National Investment Fund for Mongolia. With over 15 years at Franklin Templeton, Mr. Marius oversees the $1.9 billion National Investment Fund of Uzbekistan, which holds minority stakes in 15 state-owned companies. He previously led corporate strategy and investor relations for Fondul Proprietatea, a $2.5 billion fund listed in London and Bucharest. Please put your hands together for Marius Dan.
Thank you. Good morning, everyone. Thank you very much for the invitation to speak today about this National Investment Fund model. This is a structure that we as an organization believe that would be very suitable for Mongolia to mobilize investments into the local capital market, attract institutional investors into the country. I think Mongolia has done extremely well in attracting debt investors, but this is a way for global equity investors to get exposure to the country. I've been with the firm for 15 years, managing Fondul Proprietatea in Romania, and for the last year, the National Investment Fund of Uzbekistan, which is a fund that we've set up on May 1st, 2025. And we are now in the IPO process. 3 days ago, we announced the intention to float. So the IPO is happening. It will be completed by the middle of May. And we've seen very strong institutional interest. We launched the transaction with cornerstone investors for $300 million commitment. BlackRock, Franklin Templeton, Red Will, and the foundation from South Africa are backing us. But just a few words on Franklin Templeton. We are global asset managers. We have $1.7 trillion under management, and I am part of the group called Templeton Global Investments, which manages equity investments in emerging and frontier markets. As part of that group, we have about $90 billion under management. In terms of the track record, a few words of what we've done in Romania, because this is where this entire model started. This was a vehicle set up by the Romanian government to compensate individuals that had their properties taken away by the communist regime. And because the government didn't have money to pay for the compensation claim, they set up this vehicle by injecting minority stakes and majority stakes in some of the largest state-owned companies in the country. This was in 2005. In 2010, we started managing the fund. We listed it within 3 months on the Bucharest Stock Exchange, and it has been a huge success for the country, despite a lot of opposition from state-owned companies, from boards of directors, from management teams, and reshaping, transforming, improving efficiency and profitability. We did it anyway for them. The fund performed really well. The share price increased about 15 times over the past 15 years, and we distributed around $7.1 billion to the fund's shareholders through dividends, capital returns, share buybacks, and tender offers. But one of the biggest things that we've done for the country is changing the perception of international investors on Romania, because we were very proactive in marketing the fund, marketing the portfolio companies, the capital market, and this has led to a flurry of transactions, both from the state-owned company sector as well as from the private sector. So just in the fund's shares, we were able to attract $1.5 billion in portfolio investments from foreign institutional investors. To date, since the fall of communism, this is still the largest foreign direct investment for any Romanian company. We've basically boosted the activity on the capital market in the country. We've done around 14 transactions on the capital market, $3.5 billion. We did a lot of M&A activities, about 35 transactions, and that really contributed to attracting various investors in Romania. So we were part of around 60% of all deals that happened in Romania for this period of time in which we were active. In terms of the SOEs themselves, our focus in creating value was really in increasing efficiency and profitability, making sure that the companies are well positioned to capture future growth. And what this slide shows is that the profitability for our portfolio increased about 12, 13 times over this period of time. So a lot of state-owned companies went from being a drag on the budget deficit of the country to actually being a supporter through dividends. Our companies pay around 3 to 4% of Romania's GDP as dividends at this stage. And then, because this template was so powerful in both transforming state-owned companies as well as opening capital markets, I set out to set up various funds like this around the world. The first one that we managed to set up recently was in Uzbekistan. As I mentioned, the fund became operational on the 1st of May of last year. And 12 months later, we're in a position where the fund is going to go public on the Tashkent Stock Exchange as well as the London Stock Exchange. Our mandate in Uzbekistan is to transform the state-owned companies, to change the governance, and we've already achieved that. We've changed the entire structure of the boards of the assets that we have in the portfolio. I've appointed the members of my investment team as well as independent directors, and then moved the structure of the boards from government-controlled to independently controlled, because that is the only way that assets, state-owned assets especially, can really fulfill their potential. And then the last part of our mandate is to really focus on bringing a lot of our portfolio companies to the market. So after we IPO the fund, we are going to IPO the underlying portfolio companies. So we will have about 6 large state-owned company transactions over the next 3 years. How does the structure work? And this is the proposal that is tailored to Mongolia specifically. The government basically carves out a portion of its shareholding in some of the largest state-owned companies in the country, up to 40% of the shares, and includes them in the National Investment Fund of Mongolia, appoints an independent fund manager like Franklin Templeton to manage the fund, to list it on the stock exchange, and then to work with the underlying portfolio companies to help them fulfill their potential, tap into the global capital markets, bring them on the international stage as well. This is a chart showing how this works. The beauty of this model is that the government is able to raise capital from international markets without selling a single share in any of the state-owned companies, because the government sells shares in the fund structure. And for investors, it is a powerful and very attractive model, because they don't have to buy and take exposure to a telecom company, an oil and gas company, a mining asset. They take exposure to a diversified portfolio of assets, and that makes it a lot more attractive, as we've seen in Uzbekistan as well as in Romania. And after the IPO of the fund itself, the government also controls the fund. So there is no transfer of majority ownership from the government to the private sector, unless, of course, there is a desire from the government to do that. This shows how the government, how the shareholding structure changes post-IPO. Effectively, the government goes from 100% ownership in the fund to 40 or 50% ownership, so remains the controlling shareholder. And in situations like this, the way that we manage this type of national investment fund, we always open an office on the ground. We hire local talent, so they're not expatriates coming to the country and working on these assets. We invest in local talent, in the transfer of knowledge, because the lifetime of a fund like this may be 10, 15 years, but what remains behind after the structure fulfills its objectives is a strong capital market ecosystem and a very strong talent pool. So I'm a firm believer that for Mongolia, this is also a structure that could really work very well in putting the country on the global stage for equity investors once again. Thank you very much.